China is secretly buying important American technology companies, and American banks are helping them. We're sure most of you guys know that any and all companies in China are directly or indirectly controlled by CCP. That's why Western governments are stricter when a Chinese company is buying a US firm, especially when it affects national security and sensitive data coming from US citizens. So China has gotten creative to hide actions by funding American private equity funds and buying US companies through these funds. This way, there's no direct link to China, but if you dig deeper, you realize where the money is coming from. So let's dig deeper into today's video. First, be sure to hit the like button as usual. Your likes help the video tremendously in the algorithm. The Chinese Investment Corporation, aka CIC, which has been a passive observer in Western private equity activities, has taken on a more active role, sparking heightened regulatory scrutiny. To set the stage, let's start with a bit of history. Not too long ago, Western private equity fund managers proudly displayed their ties to CIC, China's main sovereign wealth fund. It was a symbol of prestige and success in the world of finance. However, times have changed, and today, we find the relationship between CIC and Western buyout groups a bit more complicated and tense. So what's changed? Well, tensions between Beijing and the Western world have put a strain on this once strong relationship. Western regulators have become more cautious about direct Chinese investments, especially in sensitive technology sectors. However, in the realm of Chinese state funds within private equity, the attention has been somewhat limited. This brings us to the recent revelation that Goldman Sachs used a fund largely backed by CIC to invest in sensitive UK and US companies. This has raised some serious questions about the level of oversight and surveillance such deals deserve. First, let's take a closer look at CIC. The China Investment Corporation was established in 2007. It was founded as a response to China's rapidly growing foreign exchange reserves, which had surpassed $1 trillion at the time. The aim was to diversify China's holdings, generate better returns, and foster the country's global financial presence. It quickly became one of the most sought-after private equity backers. Major buyout fund managers worldwide counted CIC among their limited partners. So far, CIC has committed approximately $75 billion to overseas private equity funds, mostly managed by US firms. The primary objective of CIC is to achieve long-term, risk-adjusted financial returns on its investments. This means it seeks to maximize returns while managing risks associated with its investments. Additionally, it is aimed to promote China's strategic interests globally, which translates to CCP's strategic interests. Much like many other state-owned entities in China, CIC's actions have often been interpreted within the context of CCP's geopolitics. Its investments in foreign assets, particularly in critical infrastructure and technology sectors, have raised concerns in host countries about national security and economic influence. CIC's considerable financial resources give it the power to substantially influence the financial markets of most nations. Many have speculated that CIC may strategically invest in foreign assets to influence markets or gain access to sensitive information. Now, returning to the core issue at hand, Goldman Sachs, a global financial powerhouse, has employed a private equity partnership fund financed with Chinese state capital to purchase a range of US and UK companies. To grasp the importance of this issue, let's start with the fundamentals. In 2017, Goldman Sachs entered into a partnership with the Chinese Sovereign Wealth Fund, China Investment Corporation (CIC), to establish a private equity partnership fund worth a staggering $2.5 billion. The initial intention behind this fund was to foster cooperation between the United States and China. Goldman Sachs has employed the Goldman CIC Partnership Fund to acquire 7 companies spread across both the United States and the United Kingdom. These companies operate in diverse sectors, ranging from cybersecurity to artificial intelligence and drug testing. What's intriguing about these acquisitions is the lack of explicit mention of the fund's involvement, leaving us to ponder issues of transparency and potential motivations. These acquisitions made by Goldman Sachs through the partnership fund carry implications that stretch far beyond the confines of Wall Street. Governments in the Western world, including the UK and the US, have become increasingly vigilant when it comes to foreign direct investments, especially those originating from China. These deals underscore the role that private equity funds can play in allowing sovereign wealth funds to indirectly invest in sectors that are considered vital to national security. One cannot help but wonder about the timing of these acquisitions, given the mounting tensions between Beijing and Western nations. However, Goldman Sachs has not backed down, but has instead ramped up the fund's activities, making multiple investments since 2021. This strategic move showcases the bank's commitment to nurturing economic ties with China despite the prevailing geopolitical climate. Despite many regulatory comments, Goldman asserts that they are firmly in control and has stated that the fund adheres to all relevant laws and regulations. However, regulators must supervise the limited partnership agreement to ensure it aligns with their comfort levels regarding CIC's intervention and access. It's crucial to note that Goldman is not the sole player in this arena. Other financial firms, including Eurazeo and BNP Paribas, have struck similar deals. Recently, the bank's CEO, David Solomon, met with CIC's Executive Vice President, Ki Bin, and Chair Pen Chun. This ongoing relationship underscores the significance of the Goldman-CIC partnership. It's not just Goldman Sachs. In 2017, Blackstone partnered with Chinese Investment Corp, CIC. According to insider sources, CIC has tapped Blackstone to manage Lagacor's extensive portfolio of warehouses and logistics properties. Despite all these acquisitions and deals, it's not all rainbows and sunshine at CIC. Over the past few months, they've witnessed the departure of 3 top executives from CIC. These resignations come at a time when global markets are facing unprecedented volatility. It's not just about these 3. Over the last few years, at least 17 team heads and managing directors have also left the fund. But why is this happening? It appears that several factors are at play here. First, there are diminishing investment opportunities. The world is becoming more protectionist, and deals are harder to come by. The fund's leaders are finding it increasingly challenging to deploy their capital effectively. Secondly, there's the issue of compensation and competitiveness. While CIC did attract top talent from Wall Street and beyond in its early days, recent changes in compensation structures have left some executives questioning whether their pay is truly competitive. Thirdly, there are rising restrictions. CIC was initially set up to operate as a market-based investor, but in recent years, it has faced more constraints, particularly as the Chinese government has diversified its own investments. This shift has raised concerns about CIC's ability to generate returns on par with its earlier successes. It's fascinating to see how the relationship between Goldman Sachs, the CIC, the Chinese elite, and Western governments has evolved. Once they were wooing each other, but US-China tensions have certainly changed the dynamics. News like these often go unnoticed in the mainstream media, and that's why we started our geopolitical newsletter, Global Recap. Thousands of our readers have already subscribed to receive daily geopolitical updates directly in their email inbox. No spam, just concise news. To sign up, scan the QR code on screen or click the link in the description.